tariffs. We're on that subject again. We're a little bit risk-off. If I look ahead to the European session, it's mixed. US futures look a little negative. Do we attribute that to the latest tariff news lines? What impact do you see on risk appetite?
I think we do attribute that to the latest tariff headlines, but it's amazing how subdued the reaction's been. And I think that shows that the tariff headline fatigue out there. And also, traders don't have much conviction of what tariffs will actually be implemented. There's a growing belief that there will be extensive tariffs implemented by the US, but exactly which ones is very hard to know. We keep on getting threats and then delays, and there's very few that have been implemented so far, apart from the ones against China, and that makes it very hard to trade aggressively. Generally, the theme of the past couple of weeks is this is an exhausting market to trade. It is a sniper's market. It's about headline trading, and you don't really stick with positions. You kind of trade aggressively, take profit, and sit for the next headline to kind of attack. I think ultimately, though, this tariff noise is doing a lot of damage to the US, to US companies, but that's a very long-term story and not one to trade in the short term.
Would you put gold as a part of that short-term / long-term trade? Where does that fall into all of this?
Yeah, that's a great question, Kriti. I mean, look, clearly it's been the haven of choice at the moment. I think that's because what's happening, the reasons for risk aversion are deeply undermining for the US longer term. Of course, the US is still the world's reserve currency. Of course, treasuries are still the world's main bond market and haven asset. But, they're certainly less appealing at the margin to where they were before. So people are casting around for other haven assets. And gold really kind of stands out there. So we are seeing a number of dynamic central banks buying more. We're seeing that, in fact, China have made rule changes so their insurance market can buy up a lot more. That's another long-term dynamic. All these are subtle, but the fact is, in this period of the havens in the US getting undermined, gold is looking more appealing for the long term.
Yeah, so what does it mean for global stocks then, Mark? We've just had a conversation about how maybe maybe the Mag 7 disappointed on earnings, maybe they're all really expensive versus Europe. So one investor telling us, buy certain European names as a result, others saying valuation isn't enough to motivate diversification away from those US stocks.
I think it will be enough. I think ultimately we're going to have a productivity kind of revolution driven by AI over the coming years, and that's going to be very, very positive for global growth, global stocks. Now, US stocks are already pricing that premium, so they're not appealing at the moment, but there are discounted stocks around the world that are looking very appealing. Now, that is long-term. It is true in the short term, people aren't going to rush into it. But I think that overall this year, global stock markets will do relatively well. With a lot of volatility, US stocks will underperform.